Hello, ladies and gentlemen. My name is Sasha Starr, and I would like to introduce my esteemed colleagues. First of all, Peter Bennett. It's a seasoned Wall
Hi.
Street investor, educated in New York University. Welcome to the show, Peter.
Hey, Sasha.
And of course, Nick Oliveda, the founder of IBM Pod TV Network. Where you're
I have my
watching.
own fan club.
How are you, Nick?
I have my own fan club. I bring them with me. Like,
Okay, there are a lot of things that are happening in the market. It's very interesting market. It moved up considerably yesterday on the rumors that the threat of war uh, between or invasion of Russia of Ukraine somewhat being mitigated. However, today we already have some new information that the Russians are moving back some forces, but bringing in new forces. So it's kind of, I don't believe that it will be over anytime soon, simply because of Russia has not extracted anything from the West, what they want really. There is a talk, there is a diplomacy here and there, but they haven't got anywhere. So they have to continue this bluffing game, moving forces on and then out and then on again and so on. And it will be until such time as the certain concessions will be made. So far, there are none. So the market yesterday was fabulous. The Nasdaq moved decisively up. Today, it's given up some of its gains. There are some people who believe that the major market correction is still ahead of us, and therefore we cannot relax on yesterday's move. And interestingly enough, though, the high-yielding dividend stocks, they're all in green, not only yesterday, but even today. So, Peter, what's your take on the markets these days?
Well, you're right about the markets don't know what to do for good reason. I think, first of all, because of energy, but I'll get into that in a minute. But on Ukraine, nobody knows what Putin's going to do. But I read some interesting articles that said he's going to do something at some point. But, he may just continue to bluff because he's driving the oil markets higher, and that helps him because that's so important to the Russian economies. First of all, I wanted to mention the great news on COVID. Ready for this? I was shocked by this. This 99.9% of new cases of COVID are Omicron now. 99.9%. And
Yes.
that is what I predicted a while ago, and some other people too, that it was going away. And, because we're in the fourth wave, and the fourth wave is typical of Omicron characteristics. And the fourth wave is generally since the Spanish flu when it goes away. So we've got this contagious Omicron that's spreading all over the place, but isn't that, damaging to most people. And so we're probably getting there. And by the way, the travel stocks have been moving very nicely. But if you look at the market as a whole, I noticed today that since October, it's basically flat. Went up in November, December, then it came back down to October. So, but more importantly, it's a market that I think is acting as if inflation is coming and is here. And energy, especially, prices are going to go through the roof. And that's how, all the picks I've had, just about everything has been doing well because that's how I'm investing. I've been talking about energy for a year now, maybe, and way before a lot of other people. Again, I'm not sure I am getting credit, but, it's just a fact. But I saw it so clearly and I still see it. I think we're just at the beginning of this. So I think inflation is here for the long run. there's four reasons why, even if COVID goes away, I think there's going to be supply chain. It's going to straighten out, but it'll take time. Here's an article. Elon Musk warns of skyrocketing national debt. He tweeted that this week. Something has got to give. And on the he tweets that he thinks that unfunded entitlements, I talk about this all the time, are at least 60 trillion, and he says it's 3 times the size of the entire U.S. economy. The only thing is, I think it's probably much higher. Could be 150 trillion, could even be arguably 200 trillion, maybe it's 100 trillion. But he's concerned about 60 trillion, and everybody says, oh, it's 30 trillion, but it's not. So the problem with all this debt is that the Fed is not going to want to start paying interest on all this money down the road. So they're in a rock and a hard place because inflation is much worse than it has been for a long time. I mean, we're talking about since the 70s now. So a lot of people were saying, oh, we're in 7.5% inflation. The CPI number, Consumer Price Index for January just came out, 9.5% annualized rate. 9.5%. This is a tax on the consumer. So the Fed is raising rates, and the 2-year, 10-year spread, which a lot of people look at as a sign of recession, because finance companies and other companies depend on that spread. They borrow short, they lend long, but now the 2-10 has been decreasing for over a year now, and now it's even decreasing more. The 10-year rate is 2% now, and so we're getting to the short-term rates are coming up, and a lot of people are talking about 5 or 6, 7%, 7 rate increases, maybe more, but the Fed can only do so much again. So we could easily be heading into a recession in 23 or late 23, maybe 24. Market's not going to like that. So you have that. You have rents are a lagging indicator, and housing prices were up, and so for 6 to 18 months after they lag, so that's going through the roof. The mindset of labor and the whole economy has changed, but most importantly, there's energy. Today, there's Brent and WTI at $94 and $96, and so many people have predicted over 100. I would not be surprised to see 150. I think, Pete, the market's missing how bad this is going to be most likely. The number one reason I've said is, and I went through 10 reasons 2 weeks ago, but the number one reason is the exploration production companies are shorting the capex required to just maintain the current production by 40%. So that means, as bad as now, it's going to get worse because they're not reinvesting, because they just don't want to, because of the economy, and also out of that underinvestment, a lot of it is going towards decarbonization. So they're not putting enough into oil wells and gas to even maintain where we are. Who knows how bad this is going to be, but this could be a 70s type scenario of 7% inflation over and over and over again, year after year after year. Maybe 5, maybe 9, maybe less. I have no idea, but I could see it easily happening. And that's how I've been investing with very defensive or energy oriented stocks, because everything looks very tough for the Fed and for the investor.
Peter, the energy prices are really depend on the internal U.S. policies. And remember time of Ronald Reagan when he was trying to um, hurt Soviet Union as much as possible, and he initiated certain initiatives. I don't think that he could manipulate oil prices, not at all. However, fact is that thanks to his policy, the crude prices went down to, if you remember, $8 a barrel at around 1985 or so, right before the Soviet Union started to implement new policies, the perestroika came out, Gorbachev and all that stuff. I'm wondering if US policymakers could see merits of trying to, and especially in the fight against inflation, that would be a major achievement if they could revive the domestic oil production as much as possible.
It would
But
be nice, but
would be
now let's
nice.
look at reality. Look, the crowd that's in the White House and the Democrats, and I am not going to say I oppose the idea that we may have a big problem with global warming, but if you're going to start working on global warming at the pace that they're even trying to work on, the best. First of all, they want high oil prices. The higher the oil prices and natural gas prices, especially oil, um, the easier it is to fund substitutes because now solar becomes more efficient. But there's so many flaws in the liberal thinking. It drives me crazy. I mean, look, if you want to do it on global climate change, okay. If you want to argue that, that's quite possible. But first of all, they have uh, discouraged natural gas pipelines, and they are in a dream world if they think natural gas is going away. Now, just as an example, in Boston, not only were they paying $20 for natural gas recently, but the reason and then they were substituting oil and coal, and the same thing in Europe. They were paying up to $60 a million BTU for natural gas. It normally runs like 3, 5, 2. It was down to 2, but so all of a sudden now it's like, okay, we're just going to get rid of natural gas. We're going to get rid of everything. No, the answer is we still have a ton of coal, and natural gas is going to be a transition fuel, but they're not being realistic about that. And then the actual policies have been the opposite. Everybody knows the TRP pipeline, the TC pipeline from Canada was closed. So, and I just read this too. There's a big differential now. There's so much production in Canada now that they don't have the pipelines to ship it. So there's more oil up there in Canada where you are, but now it's not getting to the U.S. And if they are going to bring it down, they're going to have to bring it down in trucks, which are using up a lot of gas or fuel to bring it down.
It's very
The
inefficient.
policies make no sense whatsoever, and and part of it's a disaster. The policies and all the regulations and all the other reasons why energy is going up. Again, if you want it to go up, fine, but don't tell people we want it to go down. Recently, now the new proposal from Democrats is we're going to take 20 cents off the gas tax, temporarily. Why? Because it's an election year. So first of all, 20 cents isn't going to do it because the rates are going to probably keep going up through the roof. But second of all, that's not a solution. That's a political solution. And that's the problem with a lot of politicians, especially I find on the Democratic side, and especially Biden, I'm afraid to say. He goes for the political solution instead of the realistic solution, and really delving deeper into the issue. But I don't think there's going to be pro-energy policies. That said, I just want to add one more thing. All of a sudden, this Ukraine problem and the idea that Russia very well may take some of Ukraine, at least, now all of a sudden President Biden's going in the energy companies and saying we want more energy because Europe is depending so much on Russia. So and by the way, Germany is doing away with their nuclear power, which is crazy in a way if you're for climate change. So now the energy situation is a rock and a hard place. It doesn't make sense what we're doing, but now that's why I feel safer with my energy investments. By the way, because now the last thing the Democrats or Biden is going to do is saying, well, we're going to not export. Maybe at worst they'd stop new exports of LNG, but now Europe's depending on us for heat. What are we going to just totally freeze them out? It's a crazy situation again.
Yes, it is a very crazy situation. Nico, what you're doing with your investment strategy? How is it doing?
Well, obviously, because of this show, I positioned in energy stocks, which were pretty good, like MPLX and USAC. And every time I look to sell them, I look at the dividend. I go, why would I sell it, even though it's done real well? But you finally talked me into buying NVIDIA, Sasha. It took me a while, but it came on the down when they weren't able to do the acquisition. So I started picking up NVIDIA stock, and after I started picking it up, I think I picked up around 260 a share. It fell down to 237. And I picked up more NVIDIA shares, So and now it's rebounded back upwards. So because I bought on the down and it came back up, I made some money on NVIDIA, and my anticipation, just listening to you, and the same reason I'm in Pfizer, is that there are the Harvards of the stocks. In other words, these are stocks that are in a very dominant position, and they're just not going to leave it. And after listening to you, I think NVIDIA is one of them. They're in the semiconductor industry, and Intel has lost a lot of ground, as we well know. They're trying to make it up, and how they're doing it, they're going to spend literally tens of billions of dollars to build new factories. So Intel is now sitting not in the predominant position, it's NVIDIA. So I started doing acquisitions on NVIDIA. I just didn't like the price, and I don't like the PE ratios. I still don't. You know,
Yeah,
Well,
you
so
know what?
it's
I'd like
not
to
going to be a big part because the
yeah,
PE
I think
ratios are,
today,
they're not Tesla, which is out
I'm
of
bearish
control,
on
but they're not
Nvidia.
great.
You know
after
what?
the
You're bearish?
after
First of
the
all,
market closing today, there will be a report of
you
Nvidia.
know what? I'm more bearish on Nvidia than you are, Sasha. First of all, I did tremendously well with Nvidia options, and you know, you
Yeah,
turned me on to the company when it was much lower.
right.
But
Mhm.
I'm concerned. There's two reasons why. I mean, one is I think the values now are so high. You know, the valuation is so
Yeah,
high.
the price earnings ratio is
I
really
think
high.
it'll maybe grow out of it, but it'll take years to grow
Yeah,
into this. But the second reason, actually, there's three reasons. Two is I was concerned about this, but their takeover, I think, was of AMD, failed, and I was concerned with this because that was probably built into the price too. And it was, you know, again, it was fabulous for last year. But then, and the third thing is, I'll just take KLAC every time because KLAC makes the equipment that all the all the chip makers are uh, using, you know, to test their chips, and it's a necessity. And I go back to that Barron's article I read that they are the Levi's of the gold rush. In other words, Levi's made the most on the gold rush because they supplied the equipment.
sure.
So I don't care who wins. Intel may do better, Nvidia may do better, but I love KLAC for the valuation. It has a small dividend, but it's the chip shortage is going to continue for
Right.
probably a
I'm not a,
decade or more,
yeah.
and probably Nvidia will catch up to the valuation. But the chip shortage is going to be tremendous. I mean, it's autos, it's everything. They can't even get the chips now. And plus, as we're going to more and more virtual reality, that's going to use a huge amount of chips.
Mhm.
So that's why I like KLAC. I've sold the options at a very high price, 4,500, and it's done very well so far. But it's been a little erratic. But that's the company I think is the way to play chips more than Nvidia. But Nvidia may be fine.
Just a word about, first of all, you mentioned AMD. AMD is doing tremendously well. I had very, very good position on options, which I exited just an hour before the program and
Oh
made
yeah,
very good profit on that. Now, NVIDIA is a very interesting stock because it's a driver or of all high-tech sector right now. Everybody's watching NVIDIA, and depends on their report, we will see the all high-tech sector will move either considerably higher tomorrow or after the market close and report will be revealed, or it could move substantially lower. See, with
also
NVIDIA,
right.
Yeah.
interestingly enough, I was looking at the profit estimation of each of the last 4 quarters. They have incredibly high expectations each time, and they're moving them higher and higher and higher. And each
Mhm.
time Nvidia beats it and beats it and beats
Yeah,
all the way
probably will again.
now.
Yeah.
It's very difficult to figure out what's next because remember, just, what, 3 months ago, Nvidia was $360 a share.
Saw that.
If I'm
Correct.
correct.
Yeah.
Now today it's trading at what, 250
Is
something,
it?
Yeah.
Wow.
7?
Wow.
Well, I was
It
able to buy
split.
some
It
at
split, right? Was
237
that before or after the split?
Oh, we are
after they
talking about
split up.
before, after the split, all numbers after the split. So,
Right. So it's different.
so Nvidia came down big time, around 20% or so.
Right.
Uh,
That's right. Right. Yeah, it's
And a
down
lot
about
of tech
100.
has been down. You know,
Okay.
tech is reacting
It's
to interest rates
yeah,
because,
but Nvidia is down like $100 a share. You're right, Sasha. And
correct.
yeah,
that's
I
part of the
know.
reason I bought it is because I was going, you're talking about, you're telling me it's off that much in a short period of time. The valuation, either somebody was really wrong a couple months ago or they're really wrong today. And I'd rather be really wrong buying on the low. I don't like the PE ratio. That's what Peter doesn't like. But at the same time, it's not like I have everything in NVIDIA. It's one of my few momentum stocks because I like the dividend stocks. I mean, I like the IBMs, the Pfizer's, the high
Oh
quality
yeah,
dividend stocks,
they always
the
win.
MPLX. I mean, but see, the reason I didn't go in MPLX is I'm buying on the high again. I just can't. I think it was trading around 33 a share, and I
Yeah,
picked
it's
it up
around
like
33.
28.
Yeah, I
Yeah,
bought a.
why
I've
would
been
I
buying more,
buy
but
at 33 when I picked it up for 28? And I did
I
buy
know it's hard to
Alibaba.
do that. Yeah, but
I
I
did,
think it's still my number one stock with
Yeah,
20%.
it's fabulous stock.
Yeah, it's been
I
fabulous.
agree
You
with
know
you.
what? Because I can't find
Yeah,
another stock in the energy sector where I think
yeah,
there's safety, growth, a high dividend, easily covering it.
Yeah.
It's got everything I want. Everything else I look at, like even Chevron, I went from 1% to 0.5% because I looked to say, look, it's got a 4% dividend.
Sure.
Increasing the dividend around 5 or 6, but it's going to be a long term. I don't know what energy is going to look like in 10 or 20 years. Especially 20 years. 10 years, I don't think it'll change that much. So, but if I'm getting 8.5%, with tax benefits, I'll get all my money back in 10 years. Then it's all
Oh yeah, right.
gravy.
Yeah.
And I don't think it change that much in 20. And plus MPLX is natural gas, which is, the key, because natural gas is the transition fuel and probably going to be the fuel for the next 40 years that's going to replace coal and oil, along with, of course, solar will grow and hydro, but it's going to need fossil fuels. And the other part of that is natural gas can be cleaned up a lot. I've been reading studies about that, and they can take a lot of the carbon out of the natural gas, and also the pipeline companies are getting involved in shipping carbon with decarbonization projects. So this is a whole new market.
Well, my problem with MPLX, I have a hard time buying a stock. I bought it 28 for 33. Yet I have a hard time selling it when they give you an 8% dividend. So I just hold it. I'm going like, what are you supposed to do? And I've got a lot of those energy stocks. I just hold them.
Well, I think MPLX is worth around 40 eventually. So
yeah, but the thing is, once they get to 40, here's the problem: is that
dividend
starts dropping down, though, Peter, and then the attractiveness of that stock goes down because it's not a momentum stock. It's what they're doing.
Wait. I'll tell you the answer to this, which I've said before.
I just don't see it.
If you're buying a dividend stock, unlike maybe some other stocks, I like to look at it as you're buying into a small business, just like it. So I've said it before. If I was buying a dry cleaner, or I was buying, a grocery shop, a 7-Eleven, anything, I wouldn't be pricing it every week, every day, every month, or even every year and saying, oh, look, I could sell my dry cleaner for a $10,000 profit. Oh, no, my dry cleaner is down 10,000. I'm buying it as an income stream. So if I can't replace that income stream with anything better, and it's still paying me the dividends, which I can reinvest, I'm holding it. I mean, I like to hold all my stocks for life. I haven't been able to do that in many cases, although most cases now I've gotten, I haven't sold much in the last few years. Mostly I buy and I want to, hold. So I'm not looking at if the price of the dry cleaner is down. That's the market's assessment, and the market is wrong. Like even the best companies, like a Goldman Sachs, make big mistakes.
But some dividend stocks aren't growth stocks. It's not like, hey, we're going to be building more pipelines or we're going to do something innovative. I don't see MPLX going to 40 a share anytime soon, or even later.
2 or 3 years.
Even only if inflation goes crazy, because they're not. They're one of these things that they're not doing anything innovative to have a super takeoff.
Well, look at the cash flow. This is the argument for a lot of
but their cash flow, they turn around and give it to the shareholders, which is okay.
No. They're giving part, but that's the key point.
You think they have reinvestment
because they're covering their cash flow. A lot of these pipelines, I think MPLX by 1.6 times. Mm-hmm. So their price over cash flow is how to look at it, and they're really earning. A lot of these pipelines, I'd have to pull it up, but it's maybe 14%. A lot of my pipelines. So they're earning maybe 14 and paying out 9. So that lets them do the rest, a little less than 9 now. But this lets them use the extra 5 or 6% to expand, to buy back, and not included in that cash flow is the projects that are already underway. So when they put money into a project, maybe it's coming to online next year. So that will increase the cash flow. They're already reinvesting, and that's part of the cash flow calculation. So that there is growth built into these. And even if they're not allowed to build pipelines. Plus, the other side is I could easily see now even the Biden administration waking up to the fact that, we are not doing the right thing on energy. So look, Boston's a perfect example. The reason Boston winds up paying $20 for a little while during a cold snap for natural gas instead of $3, and the reason that they're now then burning oil and coal because they don't have enough natural gas is because the Northeast states particularly have not allowed the pipelines in. But this is crazy policy because they should be allowing them in. So even New York or Massachusetts may wake up and say, wait a minute, It's better than coal. It's better than oil. We can't just rely on solar.
Peter, I like pipelines because I call them
No, but I'm
printing
just saying
money.
there's a lot of opportunity for
They're
growth.
printing money companies. Okay, all they do is they print money. But same with NVIDIA, if you look at it. And one reason the semiconductor industry is so good, once they set it up, all they do is they print money. Out comes another semiconductor. Out comes another one.
Oh,
And
I agree with you. It's just a
now, the
valuation.
companies I don't like are companies like this, because to me they're emotional companies. You may have heard of it before. Let me put them on the board. Tesla. Okay, they're not printing money companies.
Tesla's
Okay,
done very well, though.
I know they have.
Went
I know
down.
they're the darling of the stock industry, but I don't like them as an intelligent investor because they're not a printing money company. They're a dream company. In other words, we dream to go to the moon. We dream to have all these automobiles. Now,
All right.
their fearless leader has done a great job in taking money from our federal government to ship up things into the moon, and also taking money from the federal government, have them spend money on the infrastructure for electronic vehicles. So their fearless leader does a great PR job, but that doesn't mean an intelligent investor is going to go with a price earnings ratio of 1,000 and a stock
I
that could
agree with you.
explode
You
faster
know what?
than
I just pulled up
Enron.
Nvidia's.
So I'm not a buyer of Tesla.
Actually,
Well,
I'm
you know what?
wondering
But
if
that's the argument for Tesla, because for Nvidia, I just pulled up their price to cash flow. Again, on an
Okay.
MPLX,
You're
we're
talking about
looking at
NVIDIA price
6
to cash
or
flow.
something like that, which is like a 14% return. According to TD Ameritrade, and again, I'm not against Nvidia. I just am
Okay.
uncertain
All right.
about
Well, you gave me
it.
another
But we're
option.
looking at a price to cash flow of 64.8. So they're earning maybe 1.5% in cash flow, rather than, what I like is I like to see 12% in cash flow or 18% in cash flow. So again, that's hard to say. I want to mention a couple of things quick, because time is already running. It's hard to
Oh, wow.
get everything in half an hour. First of all, Bitcoin. Bitcoin's now down to 43, and we like to discuss that briefly. But so I've been talking for a while that the infrastructure bill has inside it, which was already passed, the one that was passed, a lot of rules that crypto investors are going to hate. And what they are going to hate is that, one, there's going to be very little secure transactions. The government's going to be able to find out everything within the next 2 years, but also tax reporting is going to be intense on that. So this week, just within a week or so, the CFO of Intuit, an accounting software company, came out
They
and
do
said,
TurboTax.
he said investors are going to be, these are the exact words, he said, they are going to be shocked at the complexities of tax reporting for crypto this coming season. So all of a sudden people are like, oh, I have crypto, I don't have to worry, it's all a secret. No, this is all going to be disclosed. The government's going to know everything. And it's very hard to, not only, I mean, there's so many implications of this in terms of secrecy, they're not getting it, but also they have to pay tax on the gains and they have to report it, which is very complicated to figure out the basis. So it's going to be a nightmare, and this is just going to keep driving the crypto market down, which is what it's been doing. And I expected it, just as people figure this out. Hey, wait, this is, as Paulson said, a scarce amount of nothing. I wouldn't be surprised if it's.
By the way, it's the biggest fraud on the internet right now. It's people that seriously, it's Chinese women that go on there, and it's all fake. Fake Chinese women that say, "Oh, I'll show you how to double your money in cryptocurrency. Send me your money,"
really?
and then they just take the money and they run. So
Yeah, the whole thing is.
you're going to see this house of cards fall. The only question is when, Peter.
Yeah, well, I think it'll be a gradual decline, but wait till the tax season. That's going to be, as people are filing their taxes now, they're going to say, wait a minute, this is not as secret.
Yeah, I mean, I've seen frauds like this before, and what happens, it takes several years, usually about 3 years, before all of a sudden it just explodes downwards. And part of the reason why, I don't know if you saw the guy who did Coinbase. He just bought $100 million home in California. Come on, everybody knows if money's going in, who's taking it out?
Right.
They don't manufacture anything, so what it is, it's just a big Ponzi scheme.
Well, I'd like to chart Beanie Babies and Tulips in Holland. You could chart them.
Tulips in Holland, Beanie Babies.
And it'll probably look sort of like, whoa.
Just add crypto to the list. It's much ado about nothing. But I'm just waiting for it to explode. And I think in the next 3 years, you're going to see it's going to be dead completely. And the people that invest in are just going to lose their
I would say it could go to $1 million to zero, but there's no fundamental value.
There's no value in it. Yeah, right.
Most likely closer to zero.
So I like to invest in real things, not into some guy's fantasy.
So the only thing for crypto, maybe the fact is that all the stocks issues are already absorbed by the price of crypto as of now. So maybe there is a case that it could move a little bit higher. But what can I say? Good luck. I'm not.
I don't think so, because you know why? A lot of people look. You have a lot of retail investors in crypto. The main investors are not, Goldman Sachs putting in half their portfolio.
Yeah.
So or Citibank or whatever. Maybe big companies take a small percentage just as a speculative bet, but this is spec money to them. But investors are retail investors, and they're not necessarily the sharpest on tax issues.
I have yet, and if we had people with crypto on, yet to meet anybody who has a cogent argument for crypto. It's all this secret stuff.
But
90 countries are developing digital, by the way. I just read that 90 different countries are developing their own digital currencies now, like China.
Well, see, that would be reasonable.
Well, because there's no secrecy in any of this.
There's no secrecy about it. Yeah.
But let me mention,
why do you want a crypto that you don't even know if you can depend on the company or whatever? This it's you don't know what you're dealing with. At least, look, if I have crypto from England or crypto from Canada, at least I know the Canadian government is backing it. Here, I don't even know who's backing it. They promised to print not more, maybe a Bitcoin.
There is very interesting issue, Peter. Very interesting issue I would like to mention. Last Sunday was a Super Bowl. Now, in the commercial breaks, there are different commercials in Canada and in the United States. So I was not aware of it. In Canada, there's around some usual commercials and all that stuff. But in US, what I've learned next day, most of the commercials were about crypto.
Really?
Oh, yeah, most of them.
I watched some.
They were about crypto. And I was wondering with, how much commercial cost during the Super Bowl.
Huge amount.
10 millions of dollars. So I was wondering who is paying for these commercials.
Money goes in and doesn't come out. Come on. Hey,
ETF companies.
I don't know if you remember this. The same thing, the same phenomenon happened in the early 2000s, late 1900 for e-commerce. Go to webvan.com. They deliver this and that and invest in all the e-commerce. Boy, if you had .com behind your name, you can make millions. I even had a client come in that said, I'm worth 120 million. I said, what do you have? He showed me all the .coms he owned. You know what they did? They did nothing. And you know what he was worth in about less than a year? Zero, because it was all garbage.
He lost the whole 120 million?
Well, he never really had it, Peter.
Oh, yeah, that's
true. The real problem with crypto is you never really have it. So
I know.
It's kind of a garbage bet.
I remember very well the story with
We're dealing with the intelligent investor. They don't invest in crypto. As a matter of fact, crypto is not even in here.
We go to dividend stocks too, because we're
the guy who's intelligent in crypto is the guy who's selling it to you. Now they are doing.
Really well. Of course. Of course, somebody's walking away with the money. In
other words, tell you what, you give me money, I will give you my cryptocurrency. I got one over here, as you well know. Mm-hmm. Give me your hardcore. The only reason I don't do it is I think it's fraud. To sell this stuff.
Well, one more thing before we finish our program. Today, I would like to mention
dividend stocks
and what's going on there. I found, and it's something to do with high yield dividend stocks, because I have a quite sizable position in, everybody hates the stock, but British American Tobacco, which is not your friendly stock, but it's moving higher and higher and higher. And each time I'm thinking about selling. I don't have options on high yield dividend stocks because the reason I bought them just to collect dividends. However, that moved so much higher and keep moving higher. And all analysts' recommendations on that, believe it or not, 100% strong buy. There is no just buy or hold.
I bet you're right. I don't do it because of the issues, because of smoking. But I think it's a good investment.
So if I would think that I should sell that stock for maybe even ethical issues, not my first reason to sell, but one of the reasons. Then, in order to participate in the growth of that stock, which is evident, I would probably sell the puts. For example, if stock is trading now
Oh,
46 some dollars, I would sell maybe 50 puts or maybe even 55. Hopefully, it will not reach a 55 level. The premiums are pretty good there. So that's something to consider. At least if I will sell that stock, but I can't. I'm waiting for at least a couple of days going. That stock would go down even a little bit, but it doesn't. It just keeps moving higher and higher and higher, and I don't know what to do about that. It's a dilemma. It's a
just
frustration.
hang on. Just
Frustration
hang
of
on.
investor when stock keeps going down. It's horrible, and if it moves up, it's
No, it's not horrible if it goes up. It's good. You just can't, unless it changes, it can go up
Well,
forever,
well,
maybe.
as you
My
know, Sasha, there's nothing wrong with an addictive stock. I mean, it's a sin stock. I mean, I held Philip Morris for quite some time because I go, you hold Philip Morris or British American Tobacco,
we could do a different,
it's
a whole show on this, Nick.
addictive stocks. I mean, there's stuff that's
Well, you know
addictive.
what? We should do a show on sin stocks because
Sin
you can
stocks.
argue this
Yeah,
either way. I mean, there's societal
right.
implications. A lot of people would disagree with you. But we should do maybe a show on that. With the my pick for this week. First of all, I just want to cover Hess midstream. I mentioned it briefly. I just did 0.25% in that, but it's got a 7% dividend, increasing it's been increasing its dividend in the last year by 5%. Again, it's a small 1/4% because I like it, but it's oil, and I'm big on natural gas, as you know. That's where the safety is. But
But you're
if
telling
I'm
me a
getting
7%
7% with
dividend?
growth, the company's been growing nicely. It's well managed. It's a midstream again, and I put in an IRA, so I don't have to do the accounting on that for 0.25%. But my pick this week is interesting. So I went with P&G, which surprised me, but I put 0.5% into P&G. Why? First of all, it's consumer staples, and as the study I've pointed to a lot of times shows, in an inflationary environment, your best bets is one, energy, two, equity REITs, but you have to be really selective today, and three, consumer staples tends to outperform inflation, and it tends to do it beat inflation more than half the time. It's at least a safe company. But here's what made me do it. So Goldman Sachs puts out a 13F every quarter, which is a report of what they're holding. And you can access that in different ways on the internet. But I like to look at certain companies, and that's one of the ones I look at because these people make a lot of money. Although I've seen them make a lot of mistakes too. But so I put 0.5% in P&G, one because it's an inflation environment. But here's what I noticed. So Goldman Sachs, of all their investments, has 0.42, almost 0.5% in P&G. And that's their number one consumer staples investment. But then after that, you have Pepsi and Coca-Cola at 0.19 and 0.17. So they have more than double their percentage in P&G, and that made me think they probably know something. So I dug in a little deeper into P&G. It's got a 2.2% dividend, so it's not great, but it's a bond substitute. But they have a steady increase in the revenues year after year after year. Maybe 5%, 7%, 3 to 7%, depending on if you believe TD or E-Trade. But and very low debt, 0.28 to assets. So they can handle some inflation, and and as they've been doing quarter after quarter and year after year, they can pass it on. Look, if I like, a certain soap or whatever, I'm not going to balk at 5-cent increase. So this is, in this environment where it's hard to place cash, I really like P&G.
It's excellent defensive position, I must say, and I think as what we spoke about before, we all have to be defensive minded in this market. We don't know really what's ahead of us. It's definitely turbulent time here. So I think everyone has to be defensive minded these days. Although some aggressive bets wouldn't hurt you if you are right. If you're not right, just accept your position, take your loss. Don't be stubborn in defending the position. If you are losing the position, reevaluate that, and maybe that will lead you to right decision. It was my pleasure to have this program today. Thank you very much, Peter. Thank you very much, Nick. And I will see you next Wednesday on IBM TV, Pod TV. Thank you very much. Bye bye, everybody.